All right, everybody. So we'll be going over a couple of markets and the opportunities that presented themselves. Um, so here we have crude oil. It's going down, down, down. You saw a shortening of the thrust right here. And what's important is that the volume's dried up. And then all of a sudden, you have this high volume wave. You see that it's 1.9 times, I think. So it's almost 2 times the average volume, and then it pulls back, and you have a little reversal bar. The key is there's not a lot of selling on the pullback, and you had a reversal bar. Now it didn't go up that much because crude is pretty bearish right now. So I'm just wanted to highlight this behavior because it occurs over and over again. And finally, the second point is before that, you typically have accumulation. So this right here is accumulation. It's shortening of the thrust, but they're buying as well. And that's most evident in your AD chart, accumulation distribution chart, where you see it right here. Right there. Yes, it could be covering, but it could be covering, it could be buying, it could be whatever, but there it is. There's 4,900 contracts right here leading to the markup of prices. So that's the cause, that's the effect. All right. Next we'll go into this market here, the ES. This is a little bit crazy. It's acting very, I guess, volatile. But I mean, you can see that it's moving down, right? See the price is moving down, moving down, moving down, until you have this, which is the biggest wave in 21 waves. The volume ratio isn't really that much. Oh shit, it is that much. At the time, it was 2.7 times average up volume. At the time, 2.7. That's 270% of average up volume. It's a heavy, heavy buying activity, right? And it's the biggest in 21 waves. After that, the market did a little spring and then shot up into markup. Okay. So after that, it gave a pullback. If you got it, you got it. If you didn't get it, too bad. You just have to wait for the next one. So this was the buying activity, and I didn't, over here you don't really see the accumulation. I didn't see it here, right? You don't see it. I don't really see it at all. But on the wave chart, it's apparent because of the amount of volume. And the other thing is, two more important behaviors is that this pullback here is so weak, you can barely see it on the chart. So that's very important. That low volume pullback, and then you have this buying bar, right? And then after that, you had a heavy volume, and don't get scared by it, because after that, you get the markup bar, which initiates markup. So we see the process of the turn. It included a high volume buying activity, and after that, low volume pullback with a spring in the middle and a thrust initiating markup here and here. This was the confirmation. The higher high rally here is the confirmation that we're going to go significantly higher, because this is the trend confirmation. So as we go up, right here, this is where it was apparent to me something's off, because when price went up here to this levels, you had selling. It was 1.9 times average down volume. So that's one indication, 1.9. All right. But what was very clear, and I would say even more clear, was where it is. It's somewhere here. Yeah, there, right there, right there. So that's 1.9 times average down volume, right? So 90% more than average. But this thing was the, this is distribution. This is distribution. They had some selling up here, maybe some profit taking here, like minor distribution that they took profits, but this here was the nail in the coffin of the uptrend. So right there, it goes up to 24. That's the biggest print. That's the biggest print since the uptrend started. That's the biggest print. So, I mean, obviously that's a change of behavior. And then after that, just ding dong, right? But it had one little upthrust, and you just, if you get shaken out, you just wait for the upthrust to confirm, which it did with this red bar, and that's the short. Now, the only problem is that although we made this low, there was some intraday news that took it all the way back up, and some news about tariffs, and then after that it went down. So you just had to, I guess, if you just, I don't know, just short it again. If you get stopped, or you're not gonna get stopped. The first time you could get stopped because of the upthrust of this area, enter on the red thrust to the downside. And then if you break even, you can either re-enter or just wait for the next trade. And finally, this thing starts going down. I'm watching this to see how big the waves are, and this down, and something's going on right here. All right, now it doesn't mean you just get in, all right, but something's going on right here and right here. Something's going on, all right. So this here shows that the volumes are decreasing, selling pressure is decreasing. You have your reversal. It goes up, but it doesn't go up a lot. Why? Because they want to do a shakeout. So what it's going to do is going to take out the lows. You just have to anticipate it and just manage your risk accordingly. But this, right here, the buyers are stepping in. They do a shakeout, right, with the heavy selling and all of that. But then it picks up right here. Now this was very difficult to catch, because if you're in here, then it's a break-even trade. You see this breakdown, then the volume comes back in, and it's just very difficult to see this. So you don't see this, right? So it's a tough trade. But what's crazy is that, again, you had news, and then bulls are in control, and then it went all the way down to retest. So if you're still bullish, this is a gift. Only problem is it's not that much of a big move. It just went to that area right there, which was 57, 53, which is fine. Okay. And if you still don't get it, then I mean, this one here also set up a little move. Look at this, all this buying activity. Look at the pullback. Shit, right? After that, what they did was they pulled it all the way back down to support. And this is very common, folks. I've mentioned in prior videos. So what you have to do is watch the first pullback, okay? Because the shakeout typically doesn't occur on the first pullback. It occurs on subsequent pullbacks. So the first pullback will give you an initial indication of the strength of supply. After that, just be ready for a shakeout. A lot of times it's a gift because all they do is come back all the way down and support and allow for a low risk entry. Other times they will spring this low, and you just have to be prepared for it in advance in your mind, right? And after this, now we're going higher. This is where we're at. Okay. So this was the news, more tariff news. This was the buying. This here, if you don't know what you're doing or don't have a good read, you might think this is bearish. So if you do think this is bearish, just look at the background. Remember that this is 42,000 and this is 29,000 and an internal wave, right? Inside, so it's a pullback wave. All right, we're done with this. Was there any indication that this thing was going to go crazy on the AD chart? Let's see. I was looking at this right here. I didn't go to the target yet. Not really. I mean, there was some pressure here, but it looked initially like selling pressure. And this is where it dried up, reversed. This right here is potential accumulation. Okay, so when they go up, they pull back, heavy volume, no follow through. What do you get on the bar chart? Reversal and low volume right here. See, so this is your very low volume pullback, followed by a reversal. You have the low volume reversal, and then on this chart you have accumulation or heavy volume with no follow through. So there you go. All right, let's take a look at one more market. All right, so this market is getting very interesting to me. Why? It's in markup, very strong markup, right? This is the euro. Look at this. It's going down, right? Down, and bang, right there. Look at the volume. Look at this. So someone's buying the low. From this low, look at the volume buildup, right? So I'm very interested in this. The problem is right now the supply is still heavy, so just have to kind of be patient. But you can very clearly see that the market here is going down, and now it's rallying. Let's get rid of this average. It's going down, it's rallying, and this red bar, the red and green bar are hourly highs and lows. So it took out the prior hour high and closed above it. Okay, that's one of the things I want to see. I want to see it break higher time frame highs or lows. Whatever time frame you're on, you want to know if it's breaking the higher time frame highs or lows. So it did that with a rally. Very nice. That's the trend change. Why? Because I'll tell you why. This is all these traders, the big traders, they all do the same thing in terms of stop management. They use hourly or daily or weekly highs and lows. They use those price levels. So their stops are here. Then again, when it takes it out, you have a potential for a trend change, because instead of making lower lower lows and lower highs, it's now making a higher high, right? So if you look at the daily chart, you just look at the weekly highs and lows. If you look for swing trades, look at daily highs and lows on your chart. So in intraday, you can use hour or multi-hour. So you can see this is a lower high, take right there. And I will just wait for pullback activity, and that's all. All right, thank you. Have a good day. Bye.